The ETF giant enters the arena. First up, we've got BlackRock, the biggest asset manager on the planet, managing trillions, yes, trillions of dollars. This financial behemoth has its tentacles in nearly every corner of the global economy. When BlackRock makes a move, the entire financial world pays attention. Their decisions can influence markets, shape investment trends, and even impact economic policies. So when they filed for a Bitcoin ETF, it sent shockwaves through the market. This wasn't just another financial product. It was a signal that crypto was entering the mainstream. But what does this mean for you, the everyday investor? How does this seismic shift in the financial landscape affect your portfolio? Well, for starters, it's a massive vote of confidence in Bitcoin. It suggests that Bitcoin is maturing as an asset class. BlackRock isn't known for gambling on risky assets. They have a reputation for being cautious and strategic. They're all about managing risk and generating long-term returns for their clients. And those clients? They're not just individual investors. They're mostly institutional investors like pension funds and endowments. These are entities that require stability and reliability. Think about it. Your retirement fund could soon have exposure to Bitcoin, and that's a really big deal. It could change the way we think about retirement planning. ETFs, or exchange-traded funds, are like baskets of assets that you can buy and sell on the stock market. They offer diversification and liquidity. A Bitcoin ETF would allow investors to gain exposure to Bitcoin without having to deal with the hassle of buying it on a crypto exchange, storing it securely, or worrying about losing their private keys. It's a more convenient and secure way to invest in crypto. This opens up crypto investing to a whole new world of people who might have been hesitant before. It lowers the barriers to entry. It's like BlackRock is building a bridge between traditional finance and the crypto world. This could be the beginning of a new era in investing, where digital assets become a staple in portfolios. The hedge fund heavyweights bet big on DeFi. Next up, we're heading into the world of hedge funds with Brevan Howard Digital. These guys are like the Navy SEALs of the finance world, managing billions of dollars for some of the wealthiest individuals and institutions on the planet. And guess what? They're pouring money into crypto, but not just Bitcoin. They're diving deep into the world of decentralized finance, or DeFi. DeFi is all about cutting out the middleman in financial transactions. We're talking lending, borrowing, trading, all done on the blockchain, without the need for banks or other traditional institutions. Brevan Howard is betting big on its potential. By understanding why Brevan Howard is so bullish on DeFi, you can start to identify promising projects and investment opportunities in this rapidly growing space. Are you interested in lending platforms that offer higher interest rates than your local bank? What about decentralized exchanges that give you more control over your assets? DeFi has it all. By doing your research, understanding the technology, and following the smart money, you can position yourself to potentially benefit from the DeFi revolution. The Bitcoin HODLers. Let's talk about MicroStrategy, now rebranded as Strategy, a business intelligence firm that's become synonymous with one word, hodling. This company has made headlines for its bold and unwavering commitment to Bitcoin, a strategy that has both its critics and admirers. You know that crypto meme that started as a typo but quickly became a rallying cry for long-term believers? HODL, which stands for Hold On for Dear Life, has become a mantra for those who see Bitcoin as more than just a speculative asset. Well, MicroStrategy takes hodling to a whole new level. Their Bitcoin holdings are not just a small part of their portfolio, they are a cornerstone of their financial strategy. Led by Bitcoin bull Michael Saylor, they've poured billions of dollars into Bitcoin, making it a significant part of their corporate treasury. Saylor's conviction is so strong that he has even taken on debt to buy more Bitcoin. Saylor is a true believer in Bitcoin as a store of value, a hedge against inflation, and the future of money. He often compares Bitcoin to digital gold, emphasizing its scarcity and potential for long-term appreciation. He sees the current volatility in the crypto market as just noise in the long run, and he's betting that Bitcoin will eventually be worth significantly more than it is today. This long-term vision is what drives MicroStrategy's strategy. They're not day trading, they're not panic selling when the market dips. They are hodling strong, weathering the storms and waiting for the long-term gains. This approach requires a lot of patience and a strong belief in the asset. This strategy might seem crazy to some, but it's a classic example of having a strong conviction and sticking to your investment thesis. It's about seeing the bigger picture and not getting swayed by short-term market movements. MicroStrategy's approach highlights the importance of having a long-term perspective when it comes to crypto. Their commitment serves as a case study for other companies considering a similar path. If you believe in the underlying technology and the long-term potential of this asset class, then you need to be prepared to ride out the waves. The journey might be turbulent, but the potential rewards could be substantial. Bridging the gap for traditional investors. Let's move on to another giant in the financial world. Fidelity Investments. These guys manage trillions of dollars in assets and are a household name in the world of retirement accounts and mutual funds. But what you might not know is that Fidelity has also been quietly building out its crypto offerings for years. They were one of the first major financial institutions to offer Bitcoin custody services, meaning they'll store your Bitcoin securely, offline, away from the prying eyes of hackers. And more recently, they launched their own crypto trading platform for institutional investors. This is a big deal because it gives Fidelity's massive client base, including hedge funds, family offices, and even other financial advisors, a trusted and regulated way to get involved in the crypto market. Fidelity's involvement brings legitimacy and accessibility to the crypto space. By offering crypto products and services, they're making it easier and more appealing for traditional investors to dip their toes into the water. As more and more institutional investors come on board, it creates a snowball effect, bringing in more money, more liquidity, and more stability to the crypto market. Traditional exchanges. Embrace the future. Finally, let's take a look at what's happening across the pond with Börse Stuttgart Digital, the digital asset arm of Börse Stuttgart, Germany's second-largest stock exchange. This institution has a rich history and a strong reputation in the financial world. They're at the forefront of integrating crypto into the traditional financial system, pushing boundaries and setting new standards. And they're doing it in a big way, leveraging their extensive experience and resources. One of their most interesting initiatives is their crypto trading platform, which is designed to be user-friendly and highly secure. This platform allows investors to trade cryptocurrencies directly on a regulated exchange, ensuring compliance with financial regulations. This is a major step towards mainstream adoption because it provides a familiar and trusted environment for investors who might be hesitant to use a crypto-only exchange. It bridges the gap between traditional and digital finance. Börse Stuttgart Digital is also working on integrating crypto into other parts of the traditional financial infrastructure, like offering tokenized securities, which represent a new way to think about ownership and investment, and exploring the potential of blockchain technology for settlement and clearing. This could revolutionize the way transactions are processed. Their goal is to create a seamless bridge between the world of traditional finance and the world of digital assets, making the transition smooth and efficient, making it easier and safer for investors of all levels to participate. This inclusivity is key to the future of finance. Other traditional exchanges around the world are starting to follow suit, recognizing the growing demand for crypto products and services. They see the potential and are eager to innovate. This shift is driven by both institutional and retail investors. This is a trend that's only going to accelerate in the coming years, as more and more investors demand access to this new asset class. The market is poised for significant growth as the interest in digital assets is at an all-time high. By understanding how these big players are approaching the market, you can gain valuable insights and potentially make smarter investment decisions. Knowledge is power in this rapidly evolving landscape. Stay informed and stay ahead. Don't be afraid to learn from the best, do your research, and always remember to invest responsibly. The future of finance is bright, but it requires careful navigation. With the right approach, the opportunities are endless. So there you have it. 5 major players in the crypto space and how their strategies are shaping the future of how we invest. The key takeaway here is that the institutionalization of crypto is not just a trend, it's the future. By understanding the motivations and strategies of these big players, you can gain a significant edge in navigating this exciting and rapidly evolving market. Remember to do your research, invest responsibly, and never be afraid to adapt your strategies as the market changes. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you don't miss out on future videos.